What moves markets? It's of course capital inflows, capital outflows. But what I find interesting is that how few people actually look at capital movements. Because how does money flow into crypto? Usually via stablecoins, right? If you want to buy an altcoin, you usually have your fiat, your US dollars, your euros. You deposit this into a centralized exchange like Binance. Binance then sends this over to Tether. Tether then prints the stablecoin, the USDT. And then with that USDT, you can buy the altcoins. So why not have a look at those capital movements? Maybe we can discover some hidden dynamics that most people aren't considering. Check this out. This is the aggregate stablecoin supply. And it tended to grow quite continuously. Then came the bear market. And then since October of last year, we had the turnaround. We suddenly saw an expanding stablecoin supply again since October of last year. But here's the problem. There seems to be some kind of lag in there, right? Because in the background, we've got the Bitcoin price and the stablecoin market cap continued to expand while the Bitcoin price didn't necessarily go up anymore. And vice versa. We saw the stablecoin market cap go up, but the price already recovered from 16K all the way to 23K. What's going on here? Why is the stablecoin market cap lagging that much relative to the price? I think it's because we look at the wrong price when we track Bitcoin relative to the stablecoin market cap. Instead of looking at Bitcoin, let's have a look at the altcoin market cap. The altcoin market cap is currently at a bit over 500 billion and it tended to go down and sideways for a while. But then since October, since the middle of October, we suddenly saw how the altcoin market cap grew by 166%. The turnaround happened in October of last year, exactly the same time when the stablecoin market cap started to go up. It was October of last year. What I like about the stablecoin market cap chart is that it's relatively free of volatility, as in it either trends upwards or it trends downwards, sometimes maybe slightly sideways, but it doesn't really fluctuate that much. Thus, we can pretty safely determine where we currently are in the market. If money is flowing into crypto, if the stablecoin market cap is expanding, then the altcoins tend to go up in price as well. And so let's have a look at that delta. Again, we see the stablecoin market cap in the background, but what we've got here in the foreground is the change of that stablecoin market cap. Again, it started to expand in October of last year. Whenever there's a contraction, as in the first 3 quarters of 2023, then we also don't see the stablecoin market caps going up. But when money is flowing in, the altcoins do very well. Currently, unfortunately, there isn't that much inflow anymore. So we are not necessarily bearish, but we're also not super bullish on the altcoins. I believe the major catalyst for the altcoins might be the inflows in the Ethereum ETF. Right? This is what people think. First of all, it's Bitcoin that tends to appreciate. Then people swap over their profit from Bitcoin to Ethereum. Once Ethereum appreciates, then that capital partially moves over to the altcoin. So there's more and more risk taking going on as the bull run continues. Let's put this theory to the test. This is the capital rotation net position change. And yes, in 2017, we've seen exactly that. We first seen a lot of capital flowing into Bitcoin. And then afterwards, a secondary wave to Ethereum. So the Bitcoin wave is in orange, the secondary wave for Ethereum in blue. And we've seen pretty much the same thing in 2020 and 2021. First, it was Bitcoin where all the capital was flowing. Then we saw Ethereum picking up as well. In the recent rally, we haven't really seen how Bitcoin preceded Ethereum. By the way, there's also the stable coins shown here. That's in green. That's what pushes mainly the altcoins up. So this is Bitcoin. Then afterwards comes the altcoin market. Again, we've got Bitcoin. We haven't yet seen the altcoin market picking up to the same degree. And so here's the Ethereum dominance, how much of all of crypto is in ETH. And of course, we did see a very nice rally just recently with the news that an Ethereum ETF will get approved at some point. So that's a 20% rally. And I do believe that this will continue at least to historical levels. Again, because the market trades in anticipation of events, right? Once the Ethereum ETF starts trading, then probably the Ethereum dominance won't outperform that much anymore. But up until that point, I believe we will continue quite nice Ethereum performance. It was the same for Bitcoin. The Bitcoin price rallied, the inflows really peaked up, and that was in anticipation of the Bitcoin ETF launch. Once the Bitcoin ETF was out, the Bitcoin dominance tended to decline. Now, it's always interesting to look at capital concentration, and very often we do this for individual altcoins, right? We look at how many holders hold, say, 50% of the supply, how concentrated is the supply. We rarely see this for the stablecoin market, but there is a chart. And when I first had a look at that chart, I was really surprised. Crypto is really dominated by the large players. Have a look at this. This is the stablecoin wealth distribution. And the wallets that hold more than 10 million worth of stablecoins make up the vast majority of the market as a whole. 1 to 10 million also has quite a bit of a share. Everything below 1 million is actually the minority. Let's take away the massive wallets. And what we see is a continued accumulation. So all of the ups and downs in the general altcoin market are not generated by the small Joe Schmoes. And with small Joe Schmoes, I mean wallets that have less than 10 million. What's actually moving the volatility in the market are the wallets with more than 10 million. They are the ones pulling out and reaccumulating again. They are the ones that cause the altcoin rally. If the massive whales aren't on board, then the smaller wallets won't do much. This continued accumulation by smaller wallets does not mean continued price increases, simply because the very large whales, they take profit from time to time. They exit the system every now and then. And so that's the share of all those different wallet cohorts. Currently, 54% of all of stablecoins are in the minimum 10 million holder range. Another 21% are in the 1 to 10 million. So 75% of all of purchasing power in stablecoins is millionaire money. I found those insights super interesting. It shows that it's not necessarily mass psychology that's moving the prices. Very often there's also price manipulation, right? That's why we look on chain. That's why we look at, for example, the number of holders of various assets over time. We look at, is the number of retail investors increasing over time? But in the end, the final say is with the large wallets. We have to keep monitoring them, but luckily we've got on-chain analytics and we will not get surprised once the whales start selling again. But so far, things still look relatively stable. We aren't expanding that fast anymore in the stablecoin supply, but we're definitely not yet turning bearish. If it's the first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It does help the channel grow. If you've got Telegram, feel free to join us. Looking very much forward to chatting with you. The link is down below.